I want you to imagine for a moment that you are in the early 2000s. You've just started investing. Life is good. The market's climbing, and every dollar you put in seems to grow. Then, out of nowhere, the dot-com bubble bursts. Tech stocks crash. The NASDAQ loses nearly 80% of its value. People around you are panicking. Your friends are cashing out fast. You're tempted too. You're thinking, maybe I should sell before it all disappears. But you don't. You stay calm. You hold. Fast forward to 2008. The global financial crisis hits. Banks collapse. The stock market falls off a cliff. Once again, people run for the exits. But you stay invested. And over the years that follow, something incredible happens. The market recovers, then grows even more. You didn't try to time the market, you just stayed in it. And that's the key. So in this video, I'll show you how to start investing smart in 2025, even if you're starting small. Step by step, beginner friendly, no BS. Step 1, open your first investment account. A lot of beginners get stuck here, and I get it. There are tons of platforms and different types of accounts. But here's the truth, it's way easier than it seems, especially now that you can do it all online. Look for platforms that are known for their simplicity and clean user interface. Personally, I love systems that are well organized. It helps you stay focused. If you're in the UK, look for a Stocks and Shares ISA. In the US, check out Roth IRAs. These are tax-advantaged accounts, meaning your money can grow with fewer tax headaches. Step 2, deposit some money. Most investment apps make it super simple to add funds. Start small. Even $50 or $100 is enough. The key is to begin. This is about building a habit, not being rich on day one. Step 3, build a smart strategy. Here's where most beginners mess up. They try to pick the next hot stock. But honestly, that's gambling if you don't know what you're doing. Instead, focus on diversification, spreading your money across different investments to reduce risk. For beginners, I highly recommend index funds. These are low-cost, diversified investments that track the overall market. Think of them like a basket of hundreds of top companies. Instead of betting on one winner, you're betting on the entire economy. A simple starting allocation could be something like 70% index funds, 20% individual stocks. If you want to experiment, 10% cash for flexibility. And if you want to pick stocks, do your research. There are 2 ways: technical analysis, studying price charts and market trends, often used by day traders; fundamental analysis, looking at company earnings, leadership, and long-term potential. This is more my style. I don't invest for quick wins. I invest for the long term, 3 to 5, even 10 years. That's where real wealth is built. Let me know in the comments, have you started investing yet? Or is this your first step? Step 4, automate it. Once you've got your account set up and some money invested, make it automatic. Set up a recurring transfer each month, maybe right after payday. This helps you stay consistent and removes emotion from the equation. Only invest what you can afford to let sit for a while. And don't worry if it's not much. Small, regular investments add up over time. That's the beauty of compound growth. If you want to go deeper into stocks later on, start learning now. Study key terms like price-to-earnings ratio, cash flow, and company debt. The more you learn, the more confident you'll feel. Step 5, master the mental game. This is the part nobody talks about enough. Markets will go up and down, even crash from a time to another. The real question is, how will you react? If your portfolio drops 30%, will you panic and sell? Or will you stay calm and trust the process? The people who win long-term are the ones who stay invested, even when it's scary. especially when it's scary. It is way too hard to try timing the market. Consistency and time in the market matters more. The biggest losses often come from pulling out at the wrong time. Read about investment psychology. Learn from great investors like Warren Buffett. Build discipline. Trust your long-term plan. Final thoughts. Investing isn't just about money. It's about becoming someone who can build, manage, and grow wealth over time. Start today, even if it's just a small step. And if you found this video helpful, don't forget, like the video, subscribe, and hit the bell for more content like this. Drop your questions in the comments. I read every single one. This is Growth Minded, where we talk about mindset, money, and how to create a better future. Let's build something real.